It's okay, then I don't have to be careful.
All right, this hearing will come to order. Will the secretary please establish a quorum?
Calderon,
Here.
Hagman,
Here.
Furutani,
Here.
Koto, Harkey, Ma, Nestande, Portantino, Chesbro.
All right, Ms. Wilk, the only matter before the committee today is Senate Bill 32. No relationship to AB 32.
Maybe that's.
I want to make that clear. We take care of some housekeeping. There's some technical amendments. Those amendments have been analyzed in the analysis. You have offered some technical amendments. The only difference between those analyzed in the analysis and the ones you submitted is it adds me as a co-author. So I don't think that's too difficult for people to understand. So without objection, we'll accept those amendments as author's amendments. And I want to give you an opportunity to present on your bill, but there are members that do have to leave. So I'm going to open. Is there a motion on this bill? Oh, what happened? Did I lose? I lost. Well, there's no reason to do it anymore. I lost my member. Well, I was going to open the roll, but I was going to open the roll for Mr. Cotto. Mr. Cotto left, so he said to call him back. So we'll call him back. Okay. Then we're back to on just regular procedure. Would you like to open on your bill?
Yes, Mr. Chair, my understanding is that, yes, we do accept the technical amendments, but they are to be taken in appropriations. Is that my understanding? Or
Oh, is that it?
Yes.
You're going to be taking appropriations?
Yeah. We're perfectly, that's fine with us, whatever.
They'll be accepted today, but they'll be
Fine.
added in appropriations. Okay.
Absolutely fine. SB 8X32 is a measure for conformity. It conforms the state tax law to the federal tax changes that have been made since 2005. This measure includes several important provisions. This measure includes partial conformity to the Federal Mortgage Debt Forgiveness Relief Act, which prevents the onerous taxation of distressed Californians who are already struggling to protect their homes, their largest investment. As many Californians face foreclosure and are forced to walk away from their homes, the last thing they should need to think about is paying taxes on debt they couldn't repay. This measure puts an end to this, as it has at the federal level. Additionally, since tax credits are not considered income, taxing renewable energy production grants would treat the renewable energy production industry unfairly and would add additional costs onto these projects needed for job creation and energy sustainability. This measure will conform our laws to our state tax laws to the federal tax approach. The measure also conforms to the federal erroneous claims for refund penalty. This is an important penalty that is in place and has been in federal law for the past 3 years. The penalty is necessary to ensure that taxpayers don't take what is now a risk-free gamble by claiming unmerited tax refunds when filing an aggressive tax claim. This only applies for filers above $250,000. I ask for an aye vote. There are many other provisions as well, and I would ask for your aye vote.
Thank you, Mr. Chairman. Thank you, Senator, for bringing this up. And I do agree that changes to our tax code are needed and conformity is needed. I do have problems with a couple of the provisions that I understand that were inserted in the Chairman's bill last year, which one was the penalty assessment, and the Governor vetoed this similar bill last year. One, what makes you think the Governor will sign this one as well? Two, I think if that provision was removed, you would get a lot of opposition off this. But also, there's an underlying question when that breaks up the Prop 13 standard because it says there's a net revenue gain, and with that you need a 2/3 vote. So I wanted to get your interpretation on all three of those, if I could, please.
To the last point, it is a revenue loss, not a gain. I understand the Republican analysis has a gain. Our interpretation is that it is a revenue loss. So perhaps we need to work together and figure, so we get, we're talking about the same figures.
I guess ours comes from the Franchise Tax Board. It says it's going to be a net revenue gain in almost $4 million in the fourth quarter.
Well, let me get a clarification. Are you viewing? See, penalty provisions are not a tax increase. So, are you viewing the penalty provision as a tax increase?
We have the Franchise Tax Board here with us. Brian Putler's here, if you'd like to. We have Brian Putler from the Franchise Tax Board. Maybe you can clarify.
Yeah, I think I can help answer this. Brian Putler, Franchise Tax Board. As I understand it, Ledge Council, when it's scoring a tax bill, looks at things that are tax increases and then also looks at the things that are interest and penalties. And so the bill has about 90 provisions in it. Some of them are revenue gains, some of them are revenue losses, and then there are interest and penalty gains and losses. So when you take all the tax provisions only and isolate them, the bill is a tax loss. But when you take all of the provisions, including interest and penalties, and look at them, there can be years where there can be a gain. And so that would be the reason that, as I understand it, Ledge Council would find it acceptable on the whole to have a gain in any of the years. Because the tax issues alone are all losses.
I might add that this bill will result in pretty significant losses for 9, 10, 10, 11, 11, 12, and 12, 13. It'd be 23 million, it'll be 20 million, 10 million, 8 million, and 3 million, respectively. But I assume, I don't assume, I know that the benefits of the conformity, I think, outweigh the loss in revenue that we're going to experience, to where this is good policy.
And to answer your other question, I'm hoping that I certainly hope that the governor will reconsider his position. This erroneous penalty provision is something that's been in federal law for the last 3 years. It was instituted by President Bush. It has worked well. It is dealing with deals with the way the tax system works is that penalties provide the deterrence. Not everyone's going to be audited. It's in a sense a lottery whether you're going to be audited or not. So those that are claiming false refund amounts, if it's a mistake, that's one thing. There's an appeal process. You don't have to worry about if it's a mistake. But if it's not a mistake and you're sort of playing the refund lottery, the only thing that prevents that is a penalty. And that's the way the tax system, most people are honest, but that's the way the tax system retains its integrity. I'm hoping the governor will reconsider.
Yes.
Thank you. Thank you for the explanation. I do see, I'm a small businessman myself. Okay, we have adjusted income that's going to be higher than this, what's going on. I do hire CPAs and accountants. They do tell me, but with our penalties that we put in for last October for the 20% penalty for underreporting, and then we're going to penalize if you try to get someone back if you're wrong.
If you're wrong, if there's no reasonable basis. Right?
Hopefully we got correct consultants giving us the right information and protecting us at the time. But I'm saying in this business climate, when we're trying to create those jobs, I could agree with like 95% of what's in here. But that one, I'm just like one more gotcha to the business community if you screw up. And hopefully you don't. But I'm just saying that on the smaller business, the bigger corporation stuff, I don't have as much pity for because they do have the right kind of people and the right things. But I'm working about the small business guy who's going to bring us out of this slump, who's going to be hiring extra people.
You have the right to appeal, and it's not about mistakes and screw-ups.
Well, there's an exception. For taxpayers, 250,000 or less, they're not subject to this. And also point out there's language in the bill that says if there's a reasonable basis for the overstatement of the refund, then the penalties and interest do not apply. So it's just difficult to just some history. This is a bill that I carried last year, went over to the Senate, and the Senate Tax Committee, I think, although I didn't ask for it and it wasn't in the bill, I think they justifiably made a policy decision that individuals that overstate their refunds and they don't have a reasonable basis for it, appears they may be cheating. And so it was very difficult for me that, although I wasn't in there, to really argue against it, because we don't want to protect and encourage cheating on our taxes. And there was so much more in the bill that was helpful. In particular, there is a homeowner forgiveness provision which in effect says that whenever a bank forecloses on your home, if the home is worth less, they don't come after you for the income additional amount included in the contract for the loan. But FTB under current law considers that income, and so they get taxed in it. So a homeowner gets foreclosed on their home, and then they get taxed on the part that the difference between the value of the contract and now the value of the home. So it was difficult for me to argue that penalty shouldn't go in, understanding that we wanted to. There was a lot of good things in here, and we wanted to try and make it as non-controversial as possible. And although that's controversial, because in general people would rather pay less taxes than more taxes, I get that. But it's pretty difficult to defend and argue that that is not a rational policy choice. And so I went forward with the bill nevertheless, and now it's before us. The governor vetoed it. Did he actually say he vetoed it for that reason? Or he actually vetoed it for that reason. So, and I informed him in a letter that these bills are difficult to do. We try to make them non-controversial. We try to bring people together and agree to conformity between state and federal law that makes sense. But sometimes, welcome to the legislative process. So I sent a letter saying, we're not going to have any more conformity bills if you veto this bill. Well, we have another conformity bill, but it's the same bill that the governor vetoed, so I feel somewhat, justified in backing away from my position, because it's not really backing away from my position, because we're submitting the same bill.
It has the green energy piece, and it also has the mortgage issue,
Well,
which has come up since.
Wasn't the mortgage in my bill?
No,
Yeah, the
that's-
mortgage was in my bill. So there is an additional very important solar credit. Well, it's not even solar credit. It's going to allow solar energy projects to go forward by not taxing grants from the federal government that nobody ever thought would ever be taxable.
Right, correct.
But again, I don't think there's any opposition to that measure. And so anyway, I just wanted to make that statement in the bill. Any further testimony in support of the bill?
Mr. Chair, may I just add one small thing?
Yes.
You mentioned, and perhaps we could talk about how these conformity bills get put together, but by and large they are consensus bills, but they're not always consensus bills by the time they get to the legislature.
I understand.
And that argument has been made by the opposition. It's wrong.
They're never true conformity bills. They're just conformity if nobody feels disadvantaged by
Correct.
it. But
there's a lot of benefit in here.
The nature of what we do is a collaborative process that requires representatives to vote. Okay, we have a number of people wishing to testify in support of this measure.
Yes, Mr. Chairman, members, Donna Brownsey here representing the Solar Alliance, which is an association of more than 30 PV solar companies, as well as today the Large Scale Solar Association. We support the bill. We support particularly the ARA provision, which you explained. It is the replacement for the investment tax credit, which was not taxed. And when the financial markets evaporated in terms of the funding and financing for our projects, the federal government stepped in with this cash grant, which cannot be claimed until the project is ready. So once they flip the switch, the project's ready to go, then you can claim this credit. And the urgency for this is we must have these projects shovel ready before the end of this year. We're doing our financing now. We strongly urge your aye vote. Thank you.
Mr. Chair, members, Steve Baker with Aaron Reed and Associates representing the California Society of Enrolled Agents. The committee's had a good discussion about the overall conformity issues. Our members work directly with these taxpayers. They find it very confusing when federal law says one thing, state law says another thing. We think it is important to conform those issues to ease the burden on the taxpayers as they prepare what are already complex tax matters. We also represent Bright Source Energy that also supports the ERA provision. I recommend your support of the bill.
Mr. Chairman and members, Jai Suprasad with the California School Employees Association. We're also in support of the bill, and in this downturn economy, obviously the mortgage debt relief factor would be very helpful to those families who are affected. And we do think that given that there is an appeal process, if there's an overclaim, that would help out anyone who made a mistake in filing too much of a claim. So we do encourage you to support this bill. Thank you.
In terms of other witnesses, I don't want to restrict you too much. This is the only bill, so if you have one or two sentences you want to add on behalf of your the people you represent, that would be fine.
Great. Thank you very much. My name is Catherine Brandenburg. I'm with the Flanagan Law Firm representing Next Era Energy Resources, and we do support the bill, particularly for the ERA funds. Thank you.
Thank you, Mr. Chair, members of the committee. Jeremy Smith on behalf of the California Labor Federation. Unfortunately, it's many of our members who are caught in this mortgage meltdown maelstrom, and this short sale debt relief would be a big help to them, as well as the fact that the ARA cash grant portion of this bill would help what's going to be a big part of our future economy and our economy now, green energy producers. They need some help to employ some workers, and hopefully this bill will pass with those provisions intact. Thank you.
Welcome, Mr. Eisenberg.
Mr. Chairman, members, thank you very much. Phil Eisenberg for the Independent Energy Producers. We are in support of the bill, in particular the section dealing with the renewable tax grant. I'll leave it at that. Thank you.
Mr. Chairman, Cassandra Goff with Calpine, the state's largest renewable provider. We're operating the geysers in Lincoln-Sonoma County, the Senator Chesbrough's district. We supply over 20% of the state's renewable power, and we're hoping to develop additional resources out there. This ARA money is important to our ability to finance those projects. Thank you.
Mr. Chair and members, Don Gilbert representing TerraGen Power, the state's largest privately owned renewable developer. We have a 720 megawatt facility, wind facility, ready to break ground, $1.2 billion investment. We're ready now to build it. That assumes financing based on not being taxed on this provision. So we support the bill for that reason. Thank you.
How many jobs are we talking about?
250 jobs.
Mr. Chairman, members, Andrew Governor, Governmental Advocates, on behalf of the California Wind Energy Association, in support of the bill.
Mr. Chairman, members of the committee, Terry McGann of California Strategies representing Canon Power. We urge an aye vote. Thank you.
Lenny Goldberg, California Tax Reform Association. Slightly different take. These conformity bills, there are all kinds of provisions in here which we don't like as matters of tax policy, but they were put in by the feds. There's a balancing act here for conformity. You take the good with the bad, you take the cuts with the gains. We think it's really necessary to enact this. With regard to the claims for refunds, I think the term the senator used, audit roulette. If you can make erroneous claims for refund without penalty, that can cost the state a huge amount of money and cost the franchise tax board an awful lot of work. The reasonable basis question has been in law for 10 years, so we urge support.
All right. I'm sorry, did I not give opposition a chance? Did you want to testify in opposition to the bill? Just telling you, you don't have to. You can just submit something in writing. Okay. Please come up here. I'm sorry if I didn't give the opposition a chance to testify, but I will now. I was in too much of a hurry to move the agenda.
Well, thank you, sir. I'm sure you've heard my spiel plenty, but there are new members on this committee who may not have heard it. Good afternoon, Mr. Chair, members of the committee. Michelle Peelstuger, California Taxpayers Association. We're opposed to this bill, not because we're opposed to conformity, not because we're opposed to the cancellation of debt provisions, and not because we're opposed to the energy provision. We're opposed to this bill solely because of the erroneous refund penalty provision. And I would like to point out that there are other penalty increases in this bill to which we are not opposed. So we're not just cherry picking one provision to be opposed to. That we find it concerning enough to be willing to forfeit conformity in order to not have this provision pass. The reason for this is that, first of all, you can run separate bills on cancellation of debt and on energy, and those are in print now, so there is an opportunity to get that particular conformity if the committee so desires. We are opposed to the erroneous refund penalty because it is in the context of the last couple of years. In 08-09, the strict liability understatement penalty was enacted into law. It's for liabilities in excess of $1 million, but the strict liability understatement penalty, which allows for no reasonable cause and no reasonable basis, is already being used aggressively by FTB auditors with respect to some of our members. Now you combine that with the erroneous refund penalty, and they basically get you coming and going. And we don't think that it is appropriate in light of the fact that the understatement penalty is a California-only provision to then require conformity with the erroneous refund penalty. I'd also like to point out that while there is an exception for reasonable basis, there is no ability to protest the penalty administratively, and there certainly is no ability to do so prepayment. That provision is explicitly denied on the erroneous refund penalty. While we also have substantial penalties in other areas. We have the accuracy-related penalty, we have the non-economic substance transaction penalty, we have fraud penalties, we have the frivolous return penalties, we have the strict liability understatement penalty. So it's not as though the FTB does not have a lot of tools in their tool belt to go after tax cheats. And I also want to clarify for the record that we do not support tax cheats. We oppose this provision, and we urge a no vote.
Let me clarify that they're cheating fair and square. So it's not fair to say they're cheats because the law, the existing law, really allows them to do what they do. So that's an unfair. But if I were to try and make that distinction in my district in a community forum, I don't think. I just think that you know, I'd get in one form or another the duck walks like a duck. Okay, next.
Yes, thank you, Mr. Chair, members.
Ms. Harkey, you have a question?
Well, I have a little bit of an objection to assume that everyone who files a tax return is cheating or anyone who makes any money is automatically cheating. I find particularly offensive. I think this state, of all states, has the most onerous enforcement. And I don't know how many of you have ever been through any kind of a tax audit, but it's unbelievable what we put people through, and there is an assumption of guilt going out the door. So I hesitate to let these comments just go as if people are producing a legal tax return, that if they're not somehow overpaying, they're cheating, and then, but if they might have an erroneous refund, they're cheating, and I mean that's what all this is about. It's to try to label people. And this article that says L.A. Times, the groups oppose tax cheats. I mean that is quite honestly, I think, very insulting to the business community and to the law-abiding citizens of this state. I don't think that anyone sets out to cheat. That is not, I think we have plenty of capture, I think, for cheats. The second thing that I protest is that I agree with our testimony here that if we wanted to include items of conformity, we could have done so. But as very, very typical in this House, what we do is we package up stuff that that we can't possibly support on our side of the aisle, along with other things that you get pushed into supporting by your pressure groups. And so we look like we don't want to allow any mortgage relief, and we don't want to allow for the renewable energy. And, that's just frankly wrong. So I oppose this legislation for those reasons. There is a way to do this in a cooperative manner, and there is another way to, we've got many, many ways to catch people that are cheating. We don't have to come in here with an assumption that we're going to try to nab them one more time. People out in the district right now are in just dire times, very dire times. There was a meeting of a utility in Gardena just last week where they sent out to help with rates and whatnot, and they also indicated that they were going to have some kind of a jobs discussion. 3,000 people showed up and waited in the street in Gardena, dressed and with resumes. I don't think you know how desperate it is. We live up here under this dome, and we assume that everyone conducting business is cheating. People are struggling for their lives right now and their livelihoods, and there are no jobs. There are literally no jobs. And my husband is hiring somebody at, let me see, she made $150,000 and has a degree and everything. She's coming in as a clerk at a $40,000 just to get a job. She can't find work. And this is in Orange County, this is in L.A., and I don't know what environment you're living in up here, those of you who do, but that's not where we live. We've got really some hard times. And so to put more pressure on businesses, small businesses, is criminal right now. Thank you.
Well, let me allow a defense to the, not defense, I'm back in court. The opposition, now maybe I will respond. I didn't support the overpayment penalty, but I certainly understand the value, because what the overstatement penalty is that's not at issue here is it allows big corporations to be aggressive in their tax planning without any penalty. And if they get caught, there's no penalty. What's included in this bill is if they overstate their refund and get caught under current law, there's no penalty. So for us to say that it's okay for big corporations to fudge unless they get caught, and then when they do get caught, there's no penalty, is the wrong statement. So I just want to make that clarification. Okay, you want to go ahead?
Yes, thank you, Mr. Chair. Members, Mira Gerton with the California Chamber of Commerce, and we oppose this measure for the same reasons as my colleague stated. We would just like to state that I know, Mr. Chair, you in particular are looking for ways to reduce regulatory hurdles in the way of businesses to keep them in the state of California and motivated, and this penalty would create yet another burden, a presumption that if they ask for too much money because their returns are complex and because they are now forced to overstate, that they are therefore cheating unless they can prove otherwise. So we would discourage you from creating yet another regulatory burden for companies doing legitimate and important business in this state. Thank you.
Greg Hines, California Manufacturers Technology Association. Echo a lot of comments made in opposition of this, unfortunately. In deference to the chair's comments on with regards to the understatement penalty and how this new penalty, interrelate, I think the difference when we're talking about the understatement penalty, which again arguably is not under consideration today, that is a strict liability penalty. And so it does force companies to overpay by large sums in order to avoid the potential for a penalty for things that are beyond their control, whether it's a change in foreign tax calculations that end up affecting their federal adjustments, which then affect their California adjustments, and so on and so forth. So we have millions of dollars in overpaid, we'll call them protective claims to throw the amnesty term out there, that companies then are rightfully entitled to go back to. And we can quibble about the term reasonable when we talk about the erroneous refund claim penalty.
It's defined in
it
federal
is,
regulation.
It is. But what I'm getting at is we're talking about a perception here. Companies now filing refunds have this threat of having to go before FTB, appeals process, et cetera, et cetera. It's something when you compare it with the understatement penalty with millions of dollars at stake, our companies are telling us, we're concerned. And that's why we're here. And it's unfortunate that when you look at the bill in total, we're supportive of the home buyer components. We're supportive of the ARA funds. We're supportive of the conformity bill as a package, including some of the provisions. Mr. Goldberg talks about things that he doesn't like. I could list off a litany of the 90-plus items that we don't like, but as a package, we do. This one is a non-starter, and it's unfortunate those are being held hostage by this issue that we're all but certain the governor is going to veto, and we'll be right back here with another bill.
Well, why would the governor want to veto something that will bring more revenue into the state?
He already has. He called this particular item out in his veto message last year, and there's been no communication to the contrary as we've moved forward with this. In fact, I would assume, and this is an assumption, but that some of the supporters, in particular on the ARA fund, could come up and tell you that their conversations have suggested that he's in the same position. So I know we're getting those communications. Maybe that lobby is going to be better when they get to the governor's office, and the sweeteners that have been put in here are going to do it.
The overstatement penalty was his idea, and the overstatement of refund is the other side of that coin.
I think there's some debate in this building as to whose idea the understatement penalty was, but that was 2 years ago and many budgets ago, so we can debate that later.
Okay, eye of the beholder. Let me point out that last year, to balance his budget, we increased sales and use tax, which is a regressive tax on poor folks, and we increased the personal income tax, and we turned around and gave business $1.8 billion in tax credits. Single sales factor, $1 billion. NOL and carryback, $500 million. Tax credit sharing, $350 million. So it's not as though we're unmindful of creating investment, creating business, and creating jobs. But if we're going to provide those kinds of incentives, we have a right to expect that the reporting on tax returns is going to be accurate, and it is true on the penalty or understatement penalty that it forces companies possibly to overpay, which they can get back. However, there's obviously cash flow issues. But in these difficult times, I understand how you could feel, and that you, being companies you represent, that's unfair, because you're making us overpay. And we're saying as a state, well, better that you overpay than underpay. And so that's the debate. And so I think in better times, we can be much more forgiving. But I think now we're looking at a $20 billion deficit, not only this year, but according to Ledge Council, for the next 2, possibly 3 years. $20 billion deficit that we have nothing to do with up here in Sacramento. It's strictly the economy now. So anyway.
And if I could, once on the points of the giving away for nothing, the 1.9, and I understand it's a completely different issue, and we'll have many time for debate as we move forward in a difficult budget year. Most folks here will recall both businesses, the business community pays sales tax, a large percentage of it. In particular, the fact that business inputs are not exempted in our existing sales tax.
And there are 6 bills this year to
there's more
exempt
than
business
that,
inputs, and we're going to take a look at that, because actually, that's better policy. But we're also going to take a look at how it affects the total.
PIT, small businesses file under that. If you're not a corporation, you file under personal income tax corporation. And then let's talk about the NOLs and the R&D credit sharing. Those came at the price of having 50%, limiting your use of R&D, enterprise zone credits, and others to 50% for 2 years. And we actually suspended net operating losses altogether for 2 years at a time when I think arguably we faced the worst recession that this country has faced, at least in my time, and most folks are saying in the last 70 years. So those didn't come without a price. And I think now that we have them all on the table, again, in this challenging budget environment, proof will be in the pudding as to whether or not we're actually able to prove whether or not they actually work, because we can't count that they'll actually be here in the end. So look forward to that as a future debate. Back on this bill, encourage and oppose unless amend, and thank you.
Right. I'm going to recognize Mr. Hagman, but the suspension of the NOL is for what, 2 years?
2 years.
And,
it actually came
and
back.
Single sales and NOL when it goes, and credit sharing is in perpetuity.
True.
Okay. Mr. Hagman.
Just a general comment on the benefits we gave to corporations last year. I think it came with a heavy price. And I'm just going to ask our business leaders here in front, how much more business have you seen California gain on our neighboring states and stuff? We're going the opposite direction still, in my impression. Our unemployment's higher. We're still doing things that's oppressive to bring in business, particularly small businesses, going to create our jobs in the future. I would love for the author to take amendment, take that one section out, we can all support it. That would get you 90% of it done. We also have 2 bills, 1705 by Manny Perez that has the green energy, and Roger Nilo has 1779 that has the home tax credit. The 2 biggest things that was testified that people want today. We have other vehicles in play working through the House right now. But I think we can do a lot of this stuff conformally, but we got to look at what the price we're making our businesses pay, and we need them. If we're going to attack this $20 billion budget deficit over the next few years, we need those jobs. We need to do everything we can, and not to sit there and put more penalties out there for business, but less to get them to start hiring again, so we have less, or more income coming in, less expenditures going out.
But see, here's the statement. The statement is, you need to don't penalize corporations that overstate their refund.
That we created that.
Even though, if they don't get caught, they get the windfall. That's the question. That's the question. What's the better policy? Is the better policy to allow corporations to overstate their refund or not? Is it better to have them report more than less? Those are the issues that are at stake. I might also add that in addition to the $1.8 billion in tax breaks that we gave to business, that didn't count $2 billion in the R&D, which is in perpetuity, and $470 million for enterprise zones. So you add that up, and we're close to $5 billion that we give away of taxpayer dollars in order to encourage investment in California and in order to encourage jobs in
Mr. Chairman, I'll move the bill.
All right. Bill's moved. It's seconded. Do you have a statement? Yeah, certainly. Please take a seat or take a mic.
Actually allow them more time.
Jason Lane, California Bankers Association, also opposed.
We'll give you more time. Okay. Would you like to close, Mr. Woke?
Yes, we've had a thorough discussion of this conformity bill, and I would like to thank the chair for his comments as well, and I just ask for your aye vote.
All right, bill's moved and moved by Mr. Chesborough, seconded by Mr. Portantino. Secretary, please call the roll.
Motion is due pass to appropriations. Calderon?
Aye.
Calderon, aye. Hagman? No. Hagman, no. Furutani? Furutani, aye. Koto? Harkey? Ma? Nastande? Portantino? Portantino, aye. Chesbrough?
Aye.
Chesbrough, aye. Koto? Koto, aye. 2, 3, 4, 5. Bill is out.
All right, that measure is out. Thank you, Ms. Wogan. Thank you, members, for your patience.
You're going to hold the bill open for now?
Yeah, I'm going to hold the bill open for a few minutes for Ms. Ma to add on.